All right, everybody, welcome back. And we're going to get started with a short video from Universal Commercial Capital. And then we're going to have a conversation with Ivy and Malika and discuss the state of COVID lending.
Hi, my name is Melita Kristich and I'm sales executive with Universal Commercial Capital. You can always find me on Bigger Pockets platform, and if you've also grown all of our channels, it made it easier for you to contact us. All inquiries are welcome and we will provide you with a prompt response because our main concern is to keep our borrowers, brokers, realtors, and referrals always happy. Our submission process is easy. Once the inquiry is reviewed, a short list of items is needed for pre-approval, and we will provide you with a letter of intent in less than 48 hours. All of our loan programs are general when it comes to preliminary review. Do not hesitate to contact us and to talk to us about your loan scenarios, either fix and flip, hard money, or commercial bridge loans.
And with that, I'm going to open it up for our screen for UCC. And ladies, take it away.
Okay. Hi, how are you? This is Ivy.
We have with us today Ivy and Malika. And
yes,
excellent. What are we doing and where we're going? How's it going?
Great, thank you. I thought we were having some questions, but I can definitely get those questions out right now. Well, Melita is going to help us answer how can brokers contact us in more an efficient way, and to see if they qualify or not. Melita?
Well, they can always contact us directly via our email addresses that you can see on your screen, or you can contact us on number that is available on our website. You can also find us on Bigger Pockets platform, where we are very active and we are very open to work with new people.
Okay, perfect. Melita, do we provide pre-approvals, and how long does it take?
Well, we provide pre-approvals for our borrowers, and it depends on the loan and experience that the borrower has, how long that will take for us to give a pre-approval. Our submission process, as you can hear in our video, is very short and very easy. So that provides us the terms that we can give and give a pre-approval within a few days. And that is something that we do usually. It takes just a few days for us to give a pre-approval.
Great. And we got a question from Manuel. Do you lend second trust deed bridge loans?
Yes, we do. All of our hard money programs are able to, we do second trust deeds. Yes, it's a higher interest rate. Our combined LTV would be up to 65%. In some cases, we're able to do up to 75%.
From Ari, can you tell us exactly what pre-approval means?
Well, pre-approval means that, you provide us your scenario. The first thing we do to see if you qualify or not will be based on location, based on the loan amount, based on credit. In some cases, we don't look at credit, but it's always a must-have, a credit report to see what kind of borrower we have. And based on that criteria, we're able to provide a letter of intent, which is already a pre-approval.
Great. And what exactly do you guys specialize in? Are you looking for fix and flips, or are you looking for the investor buy and holds? Help us determine which market helps you the best.
Well, we are in all the markets. We're in acquisitions, refinance, cash out. We are looking at all type of properties. It could be residential, commercial. It could be industrial properties. It really depends on how much is the property cash flowing.
And
Hello, how are you
so, so
doing?
along the lines of cash flow, where does debt service coverage ratio fit in on your approvals?
In some cases, we're able to determine by DCR. In some cases, not. It really depends on the collateral itself and how much equity does the collateral have. For example, hard money, we really don't care if it's not that we really don't care, but it's more of collateral. And how much of the LTV can we provide for that collateral?
Cool. And Linda, I think you had some questions, maybe left over from yesterday.
Yes, hi everybody. Thank you so much. We do have questions. I came in a little late because we've been having some tech issues and I've been trying to get everyone up to speed. But I do have all the questions here, and one of them, and if you answered this already, we can just go on to the next one. Tell us, how can brokers contact you to know if they qualify for any of your financing options?
I already answered that question.
Okay. And what do brokers or
Okay.
brokers provide?
What do brokers or borrowers
Melissa,
need
you
to
there?
provide? Yes, I'm here.
Yes, what do they need to provide you? Do they need what type of documentation?
Looks like they're having a tech issue on their end for a second.
Hi, Ivy.
There
Oh,
you're back.
hi.
Is Malika available? Oh, there. Okay.
There we go.
Yeah. So we.
Sorry.
That's okay. What type of documentation should they provide to you?
Okay, for documentation, for borrowers or brokers that are initially coming to us with just the scenario, documentation is not necessary. Okay, as long as we have the property address, the loan amount, if it's a refi, what is the existing lien, and how much, what's the credit score, and what is the fund used for, if it's cash out, if it's a purchase, what is the purchase price, and what is the estimated value. With those answers, we're able to find if the loan is doable. But if they are ready to come in and they really want a soft quote, we provide a soft quote with those questions. And then if they agree with the terms, that's when we go ahead and request documents. And the first thing that we do request, for example, if it's a purchase, it's the basic application, a purchase contract, their copy of credit report, proof of funds if they have the funds for closing. We don't want to get to the end and then them not having enough for closing. So yeah, we need a proof of funds, which bank statement will do. And it depends on each scenario, but it's not a lot of documentation. I would say it's very, very simple. Very simple and accept documents that anyone can gather up and send to us for process.
Okay, wonderful. Tell us about pre-approvals. Do you provide pre-approvals? And if so, how long does that take?
Well, I already answered this question. We do provide pre-approvals. And as I said, I will repeat that we need just a few days. It depends on borrower's experience and do we have everything we need for a pre-approval.
Okay, wonderful. What about upfront fees. Are there any upfront fees that need to be paid? And is there anything that investors should know about lenders who require upfront fees?
No, we don't require the upfront fees. There is no upfront fees with us.
Wonderful. Now, what type of borrowers do you have an interest in lending to? Is there a particular investor that you are very bullish on lending to?
Well, when it comes to borrowers who we don't have interest in lending, that is bad background as far as financial criminal record, but the rest are worked with exception depending on the collateral.
Okay, wonderful. And can you go over the steps, A to Z?
Well, yes. Like I said, borrowers or brokers are welcome to contact us either by email or by phone. Give us their scenario. Then after their scenario, it's reviewed. We provide a soft quote. If they agree with the terms and the soft quote given, then we provide a letter of intent or a conditional loan approval. And after that is assigned by the borrower, then we go ahead and start the process. Now, on each scenario is different as far as purchase, refi, or cash out. But depending on the program too, is the time frame. But after we gather everything up and the appraisal is in, we're ready to start closing. And I would say for hard money, it would take about less than 7 days. For fix and flip, it can take 10 days. For our commercial bridge program, it takes less than 3 weeks, and so on.
Okay, wonderful, wonderful. Let's go over the best way for them to reach out to you. How do you prefer that investors reach out to you? Should they go to your website? Should they reach you via your 800 toll-free number or via email? What do you prefer? And I'll go ahead and write it down on the chat too.
Well, they can find us always on our website. We have our contacts there. We have our toll-free number. We have all our team members' emails there. We prefer live contact, people to call us and to talk to us about their deals, because sometimes we can just explain the idea, we can explain a little bit more. Borrowers also can explain better their plans, and we do have contacts with our borrowers every day. Ivy also can say something about it.
Well, I think, yeah, the best way to contact us is either by phone, email. We have different channels already on social media. But the best way is, direct, calling us. Melita is, like we said yesterday, she is the head of our Bigger Pockets platform. So she will be the main person to contact there. And she's the one that answers all the inquiries there. And me, well, I'm everywhere. I answer all the emails or inquiries as well that comes either from social media or Bigger Pockets, or just randomly brokers, referrals. We always welcome referrals, by the way. And Eric is always available. He always has his phone with him. The only time that he's probably don't answer is because either he's traveling or he's in a meeting. But if he's not available, either Melita or I are. So feel free to give us a call.
Wonderful. Now, can you please share your phone number with us, and I will go ahead and write it down on the chat for everyone as well.
Of course. Mine, well, I'm Ivy, and my phone number is 213-784-2479. Oh, I'm sorry, 2497.
And what about the toll-free number? I know you have an 888 number. Can you give us that number?
Yes, of course. Right now it's showing on the screen, I think. It's 888-334-9039.
And we have a few questions from the audience today. Let's take a look. And do you work with individual or private brokers? And what does someone need to do to become a broker with you?
We work a lot with everyone. We have brokers, realtors, other private lending companies that come direct to us because they can't fund their deals in their in-house. We have borrowers direct. The best way to work with us, I mean, if you feel confident enough to just do it with no commitment, feel free to do that, because all of our brokers and everyone that works with us is 100% protected. But we do have a broker's package in case someone is interested to make it more professional.
Thank you. And what's the difference between your fix and flip program versus your hard money program? What is needed to qualify for either program?
Well, our fix it's very smooth process because it's only a 1-year term and there's no prepayment penalty. It has the higher leverage, and we have people qualifying now with no experience. So, yeah.
Excellent. And how many origination points do you charge?
Well, it depends on the deal. It depends on the deal, and it depends on the loan amount. Sometimes it could be between 1 point when the loan amount is higher than 500 or maybe $1 million. Sometimes it could be 2. We don't exceed. We try to negotiate so we don't kill the deal. Sometimes there's a lot of brokers involved, and we understand that everyone is trying to get a hit off a loan. So we try to work with it. But yeah, our fees are very low, and there's no upfront fee with us. There's no application fee either. So, which is great.
Cool. And we talked a little bit about this yesterday, but also today it's coming up. Yesterday, we were talking about fix and flips and the fact that you want to see some experience from your investors, especially if it's maybe a little bit more of a creative deal. How do you define what are the qualifications for an experienced investor?
Well, we define it by how many investment properties has he owned in the past. How did his investment turnaround worked out in the past? We had a case a while back where we had an unfortunate borrower who inherited a property, a multifamily, and then decided to sell it and turned around and made an investment in Chinatown. And it didn't work out for him, but he sold it right away. And then he has now a special type of property. It's for a rehab. It's like a rehab facility. Now, those kind of deals are never going to be able to be funded by a regular bank. So of course they have to come to a hard money lender. But in his case, his investment experience was really bad because the numbers turned out to be negative in all those investments that he made, or those investment transactions. So that for us, we tend to raise a red flag because we see that the borrower doesn't know exactly what he's doing. So that's why we look at the track record for each borrower, especially when we're looking at 1 million plus loans. But if we're looking at hard money of, 100,000, 200,000, of course, we're going to look at their assets. We're going to look at everything else, but it's a lot more flexible because we're just going to go based on the collateral.
So are you strictly hard money lenders?
No. We have conventional programs. I say hard money because that's our niche, but hard money, fix and flip, and commercial bridge loans, all of those are in-only loans. But we also have conventional loans where they're 3 years fixed, 30-year fixed, and the rates look even better. But yeah, we're flexible in all of our programs. You just need to come in with your scenario and discuss it with us.
So you're also doing non-conforming loans in addition to traditional.
Exactly. Mm-hmm.
Cool.
All of our programs are non-stated, so
keep going.
Oh, I'm sorry. All of our programs are stated income. So the great thing about it is that even for conventional loans, we do not require tax returns or W-2s. We don't qualify the borrower as, we don't qualify the borrower. We qualify the properties. We qualify their experience in investments, and that's how we approve deals.
So non-conventional loans for those who have more than 10 Fannie Mae loans. Do you have an option like that?
Yeah, of course.
So, Matthias, if you can expand on your question there, we might be able to go a little deeper with the topic. Kind of get an idea of where you're coming from would help. While he's doing that, do you have experienced rehabbers on your staff who help new rehabbers if they get into trouble?
What kind of trouble are we talking about? Because we do have a department that are able to help newbies, yes, but what kind of trouble?
Ari, I'll let you answer that. Working out a flip. Maybe the flip went over cost or timeline. See where we're at with that. So, it's a challenge and can't flip in the time period that's necessary, which actually brings up another really good question. What are the length of terms of most of your flip loans? Are we talking 3 months, 6 months, or 24?
Well, our flip loans are 12 months interest only, but yes, in his question about helping them out whenever they run out of time, we want to know exactly what happened that made them run out of time to not finish their current flip with their current lender, and they're trying to get a refinance to another flip. Why? What happened? Right now, a good answer for that could be because of COVID, nobody was really working. So yeah, we are able to help those. We just recently helped one, by the way.
Do you offer an extension on the 12-month term if it's needed?
Yes, we can. Of course, there's a penalty for extensions, but yes, we can.
Okay. Expanding on Ari's question, working out a flip or just general help to solve the problems on a rehab, or maybe is there a specific instance of cost runovers that you can share with us where you guys were able to help someone out and work through a particular challenge?
If we see that the ARV makes sense and the borrower is, making the right decisions, or there is enough rehab, or if the rehab makes sense, we are able to help them, and the ARV makes sense, because sometimes we are able to exceed the 75% ARV, and sometimes we can't. It would need to make sense.
Understood. And expanding on the Fannie Mae question from before, what kind of rates do you have for those who have more than 10 Fannie Mae loans? Are they asset-based or full doc loans, amortized or ARMs? So I'm gathering that he's running into a situation where he's been very experienced with Fannie Mae at this point.
Okay, yeah. Well, our rates for multifamilies like that, or portfolio like that, our rates will start at 6%. We can't beat Fannie Mae rates, where are, I think right now 4.5, if I'm not mistaken, or 3.5. We wouldn't be able to beat that, but we keep trying to get off of it.
But I can guarantee you have a whole lot less paperwork than Fannie Mae goes for.
Oh, definitely, for sure. We did one for Fannie Mae a long time ago. I would say maybe 2-3 years ago, and the number of and we just did it just to help a borrower because they really wanted to get into Fannie Mae program, which we're able to do that also for borrowers. And of course, the paperwork, it's a lot, and it's intense because it's one after the other. It's not like, okay, I give out my list of documents, and that's all I get and I'm done, right? No, and Fannie Mae is like, after you give that list of documents, there's more documents and more documents. It's very intense. So no, with us, it's not like that. It's not a lot of paperwork at all.
I can appreciate that. What's your normal timeline for closing, from the time you get an application to the time that they get the wire?
It depends on each scenario. We can close in 7 days. We can close in 10 days. We can close in less than 3 weeks, depending on the program that we have. We have many programs.
Oh. I'd like to jump around here just for a second. Jeremy Rubin, the friendly flipper, is on with us. He'll be hosting the afternoon, and super excited to have Jeremy back with us again on that. Jeremy, I'd like to invite you to jump in with some additional questions, especially from the flipping environment, since my environment's 95% multifamily.
Certainly. Thank you. All right, so I've been listening to the questions and answers there so far. Okay, so let's talk about, how about a fix and flip scenario? What's a quick way for someone to see, okay, whether or not this deal will fit within your parameters? I heard you mention 75%, and you talked about, is that of ARV, or is that?
Yes, that would be 75% ARV.
Okay, great. So let's take an example property. So we're looking at a property price of an ARV of, say, $350,000. So that 75%, you're breaking down. Now, is that covering rehab costs as well as the property purchase, or just the property purchase?
No, maybe I didn't explain myself right, but we do lend up to 90% of the purchase price, and we do lend 100% in the rehab. We just can't exceed the 75% ARV. So in this case, I don't know what the purchase price is and I don't know what the rehab is, but we wouldn't be able to exceed the 75% ARV.
Okay, great. Perfect. So as an example, I've got a $350,000 ARV. I want to see, okay, what's the most that Universal Commercial Capital can fund on that? So it's going to be the 75%. That has to include the renovation amount as well. The renovation,
Oh, of course.
the purchase price cannot exceed that. So like from a fix and flip perspective, as a flipper, you're probably going to need to get this property somewhere around the 200 mark itself. You're looking at a $62,000 rehab. If you're wanting a partner like Universal Commercial Capital to be able to leverage as much as possible. Okay, with a newbie flipper with like experience, how does experience come into play as far as, say I'm a brand new flipper, I haven't done any deal, I haven't borrowed any hard money yet before in my entire flipping career so far. I'm about to take that leap. What do you need to see from me?
Okay, for newbies, how are we funding newbies?
Okay,
We are underwriting them not by experience. We're underwriting them by the collateral they're looking at. So if there's not much, and of course their credit score as well. So if their credit score is above 620, which is our minimum right now, we take it in consideration. And if the rehab budget is maybe 20K or 30K or 50 the most, we are taking it in consideration. But our leverage or our LTC is going to be lower, or the amount due to the purchase is going to be lower. It's not going to be as an experienced flipper, which he's going to get 90% of the purchase price and 100% of the rehab. He still gets the 100% of the rehab, but he will need to put more money into the purchase.
Okay, so you're going to need to see a higher down payment. Say if I haven't, say, okay, I've got the 620 or better credit score, what kind of a down payment would I expect to have to come up with? So I have an idea, like, okay, as
I
I'm
would
looking
say,
at these houses,
yeah, I would say at least 25 to 30% down.
Okay. Okay, now great. Now let me ask you this. That is I'm getting told that there's a lot of background noise. Okay, let me ask you this now. So that 25 to 30% down, it's doable. So I can't say that, okay, someone won't loan me hard money because I don't have any experience. It is doable as long as I've got that down payment, right?
Exactly. Yes.
Cool. So let me ask you this then. Here's one way that I've worked with new investors that allows them to structure a deal when they may, be in a situation like this. Does your company allow for a second position loan behind your hard money loan?
On a fix and flip, unfortunately not.
Okay.
And the reason why is because it's a fix and flip. It's a very low term loan, so we don't allow seconds on fix and flip. But yes, on hard money we do allow second trust deed as long as we don't exceed the 65% combined LTV. Yes, we can do it.
Okay. Excellent. So where you can go with that, if you're brand new newbie flipper, say I'm trying to remove all the stops, pull out all the outs, so people can get started, start taking action. So okay, you've got someone that will loan the money. Great. What you can do if you don't have that 25-30%, you can partner up with someone. You can partner up with another investor. They can be a silent partner. I was going to say possibly put them as a second on the deal. Can't do that with these fine folks here, but that's okay. You can still do a joint venture deal.
But
So-
you can still, you know, you have someone who has the experience, or maybe you as yourself, you have been a general contractor for I don't know how long, okay, and you have been doing this type of business for everyone for the past few years now, but you want to start yourself. And of course, you don't have any experience for yourself, but you have experience for everybody else's project that you've done. We're able to consider that, for example.
So there's always ways to, you guys are willing to look at different perspectives on, okay, how can we get this borrower approved so they can start their project?
Exactly. We're not determined to say no. We want to take in and help everyone that is in the search to start themselves as a new flipper. And that's why we came up with this new idea of having, okay, let's just not reject them and say no to them. And let's just give them a lower leverage than an experienced flipper, but at least they'll have a head start to 1 or 2 or 3 flips and gather the experience they need to get the leverage they want in the future.
Awesome. Okay, now how about a BRRRR scenario where I want to purchase the property, renovate it, and then refinance it? Would that be something that, can you talk to us a little bit about your products for that?
Purchasing and renovating it and sell?
And refinancing it and keeping it. So say we purchase the property, we make some renovations to it with the intention of keeping it long term.
Oh, okay. Yes. Or fix and hold product. That makes it even a better option for us as lenders, because I think that they will be able to get a better leverage, a better rate, because we know that they're going to continue being our clients. So yes, we have that available too.
Okay, nice. All right.
Very cool. How about, do you offer deferred payment loans?
No, unfortunately not.
That answers that.
Oh yeah, that's it.
Very
Definitely
good.
not.
How about do you screen for the FEMA 50 as part of your due diligence before loaning?
Do we what?
Do you screen for the FEMA 50 as part of your due diligence?
What is that? I'm sorry.
I actually am not familiar with the term either. Jeremy or Ari, can you dive in and give us a little more background on that, please?
Yeah, that's a new one for me.
I cannot say.
We'll come back to that
I
in just a
know.
minute.
Yeah. FEMA
Yeah.
50, huh?
FEMA 50.
What do you
Huh.
do?
I have to say that this amused me a lot, seeing Ivy confused a little bit.
I know. I hear everything all the time, and I'm like always letting everybody know, oh, that's that. But now you just got me on this.
So Sarah jumped right in, and the FEMA 50 is regulations surrounding rehabs that are located in flood zones.
Oh, first of all, location for us is definitely a must. We have an appraisal department in-house that looks at location all the time, and we don't really go into rural areas, flood zones, desert areas. Like, for example, we don't lend in South Dakota and North Dakota. There are certain states that we don't lend. We lend nationwide, yes, but in certain states we don't. And the reason is because we try to stay in the major cities or a lot more populated cities or states.
So is that tracked by zip code, or is that tracked by census tract?
That would be tracked by zip code. Yeah, I don't know how my appraisal department does, but I know that I give them the property location, for example, a state that I'm not familiar with, and they say, okay, Ivy, this is a no-no. This is way too far out in the desert, or it's in a flood zone, or it's yeah, it's not worth it even looking at it. So yeah.
Understood. And then Ari's expanded on the FEMA 50 by saying most of the time you can only do 50% of the value of the building in a rehab if it's in a flood zone. This happens a lot in Florida. Naples has the FEMA 50 rules as an example. So definitely a scenario to open up a different lending approval and value scenario that you may be running into. So flood zones are always a trick. From those years in lending, I was there as well, and it always, it always comes back to scenario. And most lenders, especially commercial lenders, do have some serious and additional limitations when it comes to flood zones. There's often an elevation requirement associated with that. Thank you, Sarah. Back to you, Jeremy.
All right, and we've got Universal Commercial Capital with us here today, Ivy and Malika, and they can be reached at 888-334-9039, universalcommercialcapital.com. Is there any promo code or anything that they should mention as far as related to Realty 411? Or just mention that they found out about you on Realty 411?
Yeah. Well, I think it's better for them to just mention that they definitely find us in Realty 411. In the past webinars, we do tend to ask, how did you hear about us? And I would have to say we got some great results from Realty 411. So, which is great.
Thank you, Ivy.
Ari wants to know if he gets a discount for bringing up FEMA 50 and helping you out with that.
Send me your information. Sometimes I tend to have inquiries like that where I have to very sadly turn down. So maybe if you know someone that would lend to those types, then yeah, bring me your information over. Email it to me.
Very fun. The phone number's posted in the chat, and we've got just a couple of more minutes left here as far as questions for Ivy and Malika. Maybe one more scenario question that we can bring in. Perhaps another fix and flip scenario, or maybe there's a commercial scenario that you guys have seen recently that you were able to get approved that maybe you didn't think you were going to get approved ahead of time.
Well, we always tend to have those difficult deals in UCC, and that's why UCC has all the solutions you need for hard money, and that's their final option, and they always come to us. For commercial, for hard money, for fix and flip, we've been able to really, really, really work all the way to the end. And sometimes, there's always something coming up at the end of a loan where the borrower maybe doesn't have enough, and we're able to help those borrowers to close their deals, to get it done, and to not miss on the opportunity to get their investment purchase done. So just contact us and just let us know what your scenario is. Every case is different, and that's what we do in Universal Commercial Capital. We have all the solutions for all type of nonsense, or I would say scenarios that regular banks or even other private lending companies are not able to fund. So yes, just bring it over. we'll let you know if it's doable or
it can't
not
hurt
within
to ask.
24 hours. Exactly.
Cool.
Good
We just
deal.
had a couple extra questions come in. Um,
Mhm.
will you lend just rehab money as a second position if there's a lot of equity? Like if I get a property subject to and need rehab money, but not to purchase.
Again, we don't lend on second position for fix and flip. What we do have, and I had a couple scenarios right now from Illinois where they come with their free and clear property and they purchased it just last year and they purchased it for what, 25,000 or 30,000, but they need the rehab money. Yes, we're able to lend the rehab money only, but always in first position. We don't lend on second position.
And how about this question? Do you lend on land? From Kendall.
Unfortunately, no, not yet.
Okay.
Not yet. Land has been very tough for us, and we haven't looked at it yet. Especially right now, I think we're gonna still be on hold for that product. Maybe in the future, we never close the door on that. Maybe in the future, we'll open land loans.
Okay, great. And you mentioned some, can't be flood zones or certain criteria like that. States in general, is it all 50 states or certain
Yeah.
specific area you serve or?
Like I mentioned before, South Dakota, now North Dakota will be like our
Oh, right.
states that we don't go to, but everywhere else, yes, that has really good population and everyone is going to go to. Yes.
Okay, great. Cool. So bottom line, if you have a deal, if you have what you think might be a deal, if you have what you think, could possibly turn into a deal, if you've had the right funding, give Universal Commercial Capital a call. If you need to know more about their products, check out their website. If you got any last minute questions, we might be able to sneak one or two more questions in.
Jeremy, we still have about 5 minutes. And the
Okay.
next question is, could you be a one-stop solution for a BRRRR investor?
You have to email us. You have to email us, give us a call, let us know what your scenario is.
And do you lend on rehab only or properties acquired via tax lien or tax deed?
I'm
Did
sorry,
that one make
I
sense?
I didn't
do
know.
you?
I didn't hear that.
Okay, I'll repeat it. It's from Sarah. She asks, do you lend on rehab only loans for properties acquired via tax lien or tax deeds?
That's a really good question. I just had one particular deal, and I'm just gonna maybe close with this one because it's gonna be a little bit longer. We just had a scenario, and I felt very, very sadly to say no because we were under the impression that the property was free and clear. The borrower purchased the property from the government in Illinois, one of those auctions, but what they did was put a lien on the property for 20 grand. So until he rehabbed the property himself, that lien will be taken away. So it wasn't a lien that he would have the 20K and give it to them. No, it was a lien where it states until the property is completely rehabbed, we will take this lien off. So that was a deal killer because we didn't get till the end when we finally got title, we finally got everything in, and we were ready to fund until we saw that. And we were unable to fund on this property because of that lien. Even if it was subordinated, we couldn't fund it because we wouldn't be on first position. So to answer your question, the property needs to be free and clear, no liens. It doesn't matter how you purchased it. If the title report shows that you're the owner and there's no existing liens on the property, yes, we're able to fund it.
If there's a way, you will find it. And that's one thing that we didn't really talk about, the reverse side of that, which is, we always ask, what's the minimum amount down? But in a scenario where someone's already purchased the property, say they've either paid cash for it, so it's free and clear. You can borrow with a company like Universal Commercial Capital at 50% LTV, 40%, 30%, if you just need rehab funds, correct?
Exactly. Yeah. If the property is free and clear and all you need is, for example, your rehab budget is 100,000, we will lend you the 100,000 as long as the property is free and clear and there is no existing liens on the property.
Great.
So let's expand on the title question real quick. We've got about 2 more minutes. Will you lend on a property that's had a quiet title action in the last 12 months?
Yeah, we can. We can. There is no seasoning period if that's what the question means. You could have bought the property last month. As long as you bought it cash, that's fine.
All right. Great. Well, thank you so much for joining us here today. Any questions? If you have any additional questions here, drop them in the chat and they'll be answered after the presentation here. Thank you so much, Ivy. Thank you so much, Malika. We appreciate you guys coming on here and sharing with us. Someone just asked the question, rates are going to be dependent, deal specific. So give them a call, 888-334-9039. And they would love to hear from you and help you find a way to fund your deal.